Hello everybody, Zeff here with ZeffsTrading. Hope you guys are doing well today. It's going to be a little bit of a different video on the most important question to ask yourself as a day trader. Am I doing the following? And this is going to be an outline for beginners and experienced traders to give you a step-by-step guide. If you haven't already been doing these things, I think these are the most important things you can do. And credit is given to those who deserve it, and we can look back for Mark Douglas and Tom Hugard and many more for helping myself and many other traders out there. So of course, go ahead and check out the material that they have produced. This is greatly influenced by some of the work they have done. But going forward here, I just want to go through this PowerPoint slide. And I know already it's not a fancy chart. There's not a single chart on this entire video. There's no technical analysis. But right now, the most important thing is the slides for your psychological needs that you're probably not addressing and the problems that you are having. The first one being what a lot of people get a little bit of confused by is identifying a trading methodology with an edge. And it's really as simple as an edge is nothing more than one thing happening over another on a series of trades. This can be anywhere from an EMA crossover strategy to a certain pattern forming with a higher probability of success. You can choose whatever edge works for your personality, but the key takeaway things here that you're probably not doing is focusing on setups that offer a very distinct clear advantage within your edge, taking absolutely A+ setups. You are probably not doing those things. You are probably taking the I think trades and not being patient enough. You might have already sat down and outlined developing a trading plan. You might have made your risk parameters, your money management system, and you have very specifically outlined and examined the edge. If you haven't done those things, I think these are really the key 3 pillars on at least beginning a trading plan. The 3 stages of trading development are going to be the following. You have a mechanical stage. Now this stage employs a strict criteria to define your trading edge. All decisions are predetermined before you even get into the market or market activity begins. Backtesting and paper trading truly help validate the strategy in making sure it works. And then achieving the psychological alignment with your strategy is crucial, focusing especially on position sizing for flawless execution. Number 2, subjective stage, a more flexible approach where experienced traders use market intuition and rationality analysis to determine trading edges. This stage requires nuanced judgment based on evolving market conditions, and some of this would be called discretionary trading. And then 3, the intuitive stage, the most advanced level of trading where traders operate in what Mark Douglas would call in the zone, where things are flexible. Your mental flexibility of trading during the day is quite elevated, and price action is acting accordingly. Leveraging deep market insights and data to seamlessly adapt to market dynamics from any which way, and I'm sure we've all had our really good days. And that would be trading in the zone. The mechanical stage stands out as the most teachable and reproducible due to its reliance on systematic data analysis, which most people get confused with thinking that they can make a mechanical system and having $1 billion lie into their lap. But in contrast, the subjective and intuitive stages are highly nuanced and challenging to quantify in terms of standardized strategy, and that is what makes trading so difficult, because most traders that are very successful have a discretionary approach to them. Executing trades flawlessly. You're trading without errors. That's the most important thing. If you're making technical errors with your platform, you really need to go back into a simulator and making sure that you have absolutely everything completely laid out in your pocket. You know it better than you need to. That's not a problem for many people, but some it might be for. You need to be able to maintain a carefree mindset and think in probabilities, not letting the emotions completely cloud your judgment. Understand that the individual trade results are truly irrelevant, and you need to focus on long-term profitability with a series of trades. Everyone thinks with one trade. I need you to start thinking in 10,000 trades. Thinking in the probabilities. Know your edge works over many trades, not one, as I was just saying. Accept that winners and losers will truly occur randomly within a series of trades. Everyone is so focused. I have very rarely met a trader who can take 2 or 3 losing trades in a row and not go on tilt. If that checks your box, then you need to seriously look at the psychological issues that are forming inside you. In order to manage emotions and mindsets, you need to avoid the self-sabotaging beliefs and emotional trading that occurs day by day. Reflect and adjust your mindset through journaling and self-awareness. A journal in itself is also a discipline, which many forget to do. They'll do it for maybe a week or two, and then something will go wrong, and they'll realize they stopped journaling. Next thing you know, they blow up. This is a very discipline-oriented career, and you need to keep doing it. They might over-position size, but the other thing they might do is reduce the position sizes during their emotional times. They can increase or decrease it depending on how they start feeling, and they don't have a systematic approach to it. What they need to do is approach each trade with a fixed expectations, similar to how one would play a slot machine. This mindset helps you avoid interpreting every market movement as threatening. Realistically, it's impossible to predict the success of any single trade, since we can't know who is participating on their intentions through the market, as they are changing all the time. The outcome of trades using the same system are independent of each other. Real quick, I just want to go over, most people really do wish they were a robot and they could just completely get rid of all emotions. You're never going to be able to get rid of the emotions in trading. What you need to do is take the decibel knob and drop it all the way to 1 decibel. Most people's emotions that are screaming at them in their heads and everything else is at like 100 decibels. There's also the other side, not many people talk about, and it's the euphoria, the overconfidence when you're on a winning streak. You really, at these times, need to recognize and manage the risks of overconfidence, and not many people deal with this. It's mostly the fear-based trading, but they sometimes just start to increase size, and they start to think irrationally. They stop trading accordingly to their plan. That is something you really need to make sure that is not happening. And I would say fear. It all starts with fear. Fear is the mind killer. Quick Dune reference there. But overcoming fear is something that we all need to do. Identifying the fears of being wrong, losing money, or FOMO, missing out. Trade without the fear by accepting the unknown and focusing on long-term results. These fears come from being wrong, again, losing money or missing out either by not entering or cutting early. These cause us to feel threatened by the candlesticks. If you're sitting there in a trade, feeling threatened by the actual market movements, then you know your emotional brain, your reptile brain has come up and is telling you things that are completely illogical. So what is trading without fear? Well, I'll start by saying you're never going to eliminate it, but you can recognize the thought and not act upon it. But at its core, trading without fear means learning to trade without hesitation or internal conflict by accepting a core belief that you don't need to predict the outcome of each trade to be successful. Believing you know what will happen next creates an unrealistic expectation and can lead to poor decision making. Enter trades without accepting a win or loss. Consistently entering without a fear leads to a long-term profit plan. Trading fear is a learned mental skill like staying calm under pressure and cutting losses when necessary. Just to continue with this, expose yourself to the fear. Expose yourself to the number one thing that you are fearful in the market. And that is how you conquer fear. Reading candles objectively, or I should say, price action. I talk about this a lot in my chart reviews. Understand the market movements are neutral to your emotional belief. It doesn't care if you're in the market. It doesn't care if you're long. It doesn't care if you have $1, $200, $3 million in the market. It is not a personal attack on you. So stop assigning emotional significance to the price movements themselves and strictly focus on the price action. And then if that changes, be able to have the mental flexibility in order to either A, cut the position, B, increase the position, or C, maybe just cut your trade because you were wrong, and many other things. Adopt professional traits. And I would say if you're not doing these very big 3 things here, then you're on the wrong path. You took the wrong right-hand turn, okay? You need to make sure you are predefining the risk of every trade and truly accepting it as a core belief before each and every trade you put on, you accept the risk. Also, stop thinking on a trade-by-trade basis. Start thinking in terms of probabilities and a series of trades. And then the final thing, be able to execute your strategy, develop your strategy without the hesitation, without the fear, and that comes with exposure, with repetition, and truly, as they would say, lock in. So just to reiterate on some things and kind of wrap this up on this conclusion here, achieving consistency involves a combination of a strong edge, disciplined execution of that edge, the emotional control, and long-term perspective. I think so many people here get into the mindset of, I'm going to be a professional trader. In maybe 3 to 6 months, I'm going to have Lamborghinis, and it's going to be the best thing ever. And oh boy, they are so far from the truth. But by thinking in the probabilities and managing your mindset, you can truly navigate the market with confidence and achieve sustained profitability, as we all want. We need to make sure we flip the switch in our head, start thinking like a professional trader, and that is how we start achieving true success. How can we change the way we think? Changing is a function of desire. That's by Bryce Mellon. I'm sure you've heard of that quote before. But if the desire to change is there, you'll truly find a way to facilitate the change. I think that's pretty important there. Making sure to change when we want to change is the most important thing out of this entire little PowerPoint slide that I've had the pleasure of doing for you guys. But truly, the want, the need to change is truly just a function of desire. And if you don't desire it, then you really need to either A, look into yourself and determine if this is something that you want to do, or B, what is holding you back from the desire you choose. You need to release prior beliefs, such as, I wouldn't take this trade if I didn't think I was right. I highly doubt a single person out there, except for very few, if I asked you, are you taking this trade and you know you're going to be wrong? You'd say, no, I'm taking this trade because I know I'll be right. And that right there is the regular trading mindset, the normal behavior. The correct answer is, I have to take this trade because my edge is calling for it. And I don't care if I win or lose. I've already predetermined my risk. So be willing to let go of this mindset of thinking you need to be right or thinking you need to be wrong. That's the whole paradox of trading here. Cultivate the desire and clarity about why you need to move on from these beliefs. Why do you have these beliefs too? Ensure your motivation is sincere. And ultimately, it all comes down to practicing just like any self-discipline in this entire world, in this life, and in every moment, practicing with intention and having a true desire to change. Hopefully you guys enjoyed this little power slide here. I hope it makes you at least think a little bit on the behavior that you are doing or you need to start doing. Thank you so much, and I'll see you guys next time.